All right, good morning. It's October 31st, 2025. Happy Halloween for those of you who celebrate Halloween. I like Halloween. It's a fun holiday. We've always had fun with our kids. Although, well, my wife thinks all the decorations are getting a little too gory, but that's how it goes. Anyway, hope you guys are planning for a great weekend. All right, let's talk about our setups here, our structure for the day. And I want to go into yesterday. Let me open up yesterday's All right. Live stream, kind of see where we were. What did we kind of think we were going to do yesterday? We can take a look here. Bring that over into here. So this was yesterday's live stream. I don't even remember where we talked about it. It's usually somewhere around here in the later part. Oh, yeah. Okay. What we had yesterday was a real kind of division. So this is ES. We were kind of divided between, range expansion day or downside X plus. And we had this weird contraction day that was happening. And because we had the contraction, that it kind of created some interesting possibilities for us. One was that we would just completely take off and go, back up. So let me bring up some marking tools here. Just make this a little more clear. I think at the time what we said was, we could do something like this or something like this, right? Take out whatever the all-time high was up there. So that was one possibility. The other possibility was, it just kept going down, okay? Because we had that downside X plus model that was at play, okay? So those are kind of our two equal scenarios. Like very rarely do we get data where we have, a perfectly equal match, but we got that because we had this weird contraction pattern. So here's where we kind of said, okay, I could do this or we could do this. Okay, so this was kind of our thesis for the day. And so I actually thought, and I put a comment in yesterday's comment section, that maybe we might go back up and take out that high, the all-time high. The market doesn't like to have all-time highs created in the overnight sessions. They like the all-time highs created during regular trading hours. So I thought maybe we'd do that. That didn't happen yesterday. We got the downside X plus, right? So if we go back and look at what happened yesterday, we got the downside X plus. So we can see here, this is where we're looking. This is the downside X plus model right here. Perfect. So another accurate reading. How you trade this, though, is always a little bit tricky because this one formed, instead of forming from, top down on the open, we actually formed from the bottom up, actually more from the middle. We went down and then back up and then did all this kind of crazy stuff all day, which was really kind of nasty. But our thesis was correct. We were either looking for this or we were looking for something to kind of be a little more rangy. Now today is actually really kind of interesting. So kind of cool. We get to talk about this today. So we talked yesterday about this idea of this contraction. So if we take off our bars, okay, this here where the current DR IDR zone, and I look at the IDR levels when I'm looking at these kinds of structures, is completely within. It's like an inside bar, right? And it's completely within the prior. This is very rare when you have an ADR session like this and then an ODR session like this. Very rare to have something like that. Usually it happens because, like Europe is on a holiday or something like that. So, that's pretty rare. What's not rare is when we have the RDR session, like yesterday's RDR session, and the ADR session have that relationship. So this is still a contraction relationship, but it's between the RDR session and the ADR session, right? Sorry, I know my drawings are horrible. And so that's less rare. That's less rare. And again, though, it's still a winding up of the price, right? We had this really kind of big move, and then we're kind of not doing much of anything at all, right? And so usually what I do with this, I do a couple things. So first of all, I'm going to draw a box that goes from the high of the RDR session, and the high was really just came up to this level, to the low of that session. And I'm going to span this box all the way out through my current RDR. And then I'm going to, let's see, I'm going to give it my special, stuff going on. And the reason is because this pattern can actually throw off our data, because you get like a couple of different things that could happen with this. One is you get an explosive move out of the contraction. We talked about this yesterday, right? Usually what happens is you get an explosive move out of a contraction period. You can also, though, as we also mentioned yesterday, you also have an equal chance of it being a rotational move. So that's what makes it a little bit tricky, is you could either get an explosive move out, right? Really kind of big explosive move out of the contraction, or you can have it just where it gets really kind of rotational and ugly. Maybe it comes back down to here. And so that's kind of what we have to be prepared for, is both scenarios. So in this case, we popped out. This looks like we might be leading ourselves into a broken kind of range contraction period where, we may just end up going down like this. And a lot of times we want to test the limits of the edges. So this could still be a really great trade opportunity, because we want to come back down to this other side. And, we can come back to the other side at that point, and that's a big move. So this is 69.10 all the way down to 68.50. That's still a pretty healthy move. So because of that, we'll look at our data, but I'm looking at my data, but I'm also recognizing I'm in this broader pattern. And so I just want to make sure that I know that I'm kind of doing both and holding space for both. All right, let's take a look at our data, see what our data says about ES today. So if we bring up this, let me just check. So we have, okay, so this model, I don't know if you guys remember, for simplicity. So we know the model between RDR and ADR. The model between ADR and ODR is, we have this. So the low is below the midline, and the high is above the IDR high of ADR. So that means that we are in an upside. This is called an upside. This would be upside X, and this would be upside X plus. Okay. So we're in an upside model. We had a long confirmation, and we haven't breached this ODR IDR high level yet, but it looks like we're coming close. So I'm going to look at that scenario too. So let's bring our data over. And yes, it's Friday. We have upside, long, true. Okay. We also have contraction. So this is where I can put the contraction in right here. We only have 7 records. So I'm going to take Friday off, get more records. Okay. So this is looking better here. So upside X plus is the dominant model. Upside X is next. So 56% of the time, we're going to get some sort of upside. If you want to factor in upside as well, then we're looking at basically 60% of the time we're going to move up with something like this. Now, if I do this, if we breach, okay, so if we breach the IDR level, so a lot of times when we breach this, the range expansion becomes heavier as a play. That's not the case here. we still have upside X. Notice upside X plus is off the table. It's because, we don't recover that being entirely above the IDR high. So if we break the midline, then we're still looking at upside. Now we could completely mix upside, range expansion, or downside, right? So the midline and the IDR high are going to be really important levels for us to watch right here, because they could change, what happens. And that's this level right here. Okay, that's the IDR. And then this is the midline right here. So we want to see what happens here. We'll do that. If you guys want to get this indicator, if you, I can put it in the YouTube video, but it is this one right here. It's private. It's not locked down in any other way other than I give it out to people privately. It's not something you can search for. There's other indicators too. So this will be interesting to see what happens here. The other thing that I'll say about the range contraction, midline is really important to me. So when we are above the midline, I tend to have a more bullish thesis about what's going to happen than when we're below. So I do check that. Oddly enough, NQ is a little bit different today. We don't have that range contraction in NQ. We would need for this to be wholly within this. And that's not the case today. We also still have that upside. We have long confirmation. So let's just take a look without the contraction. What does NQ look like today? So we'll take a look at NQ really quick. See if we see anything here. NQ, Friday, upside, long, true. I'm going to put false here just to narrow down the data. Okay. So NQ is a little bit more balanced. So you can see here we've got range expansion is dominant. Upside X plus is kind of second. So again, we're kind of a little bit split between these two. If we, we opened above. Did we open above? Yeah. When I say open above, what I'm talking about, I'm not talking about our regular trading hours open. I'm talking about the period at 8:30. So the 8:30 a.m. candle opened above the IDR high or below the IDR high or inside of here. So that's what we're looking at. Okay. If we breach our IDR level, 42% of the time we're going to go to range expansion unless we don't break the midline. Okay, so the midline is going to be another important one. Let me take off Friday. Let's see what we get. So if I remove Friday, if we breach, 41%. So upside X plus is somewhat dominant. Range expansion if we breach the IDR high. If we break the midline, big time range expansion. If we don't break the midline, then more likely upside X. Okay, so that's kind of what we're planning. So we're going to look for a breach of this, which gets us high probability of either upside X, something like this, or range expansion, something like this. So it's looking like this or this right now. And it looks like we'll probably breach this. So we'll see, 15 seconds. All right. I think that's everything I wanted to cover. Hey, if these are helpful, like them, subscribe them. That helps me with the, the algorithm on YouTube. So I think these are great so far. So far I've been 100% accurate this week. I'm not always 100% accurate, but the data is really good. This is really exceptional data. And as you see these patterns more and more, you start learning how to trade them and seeing the setups that can come from knowing whether you need to wait for an edge to be formed or you can just get in right away and look for a move that's going to take off. So really, really helpful. All right, guys, have a great Halloween. Have a happy holiday if you celebrate. Have a great weekend. And above all, have an awesome trading day. Oh, wait. Someone has a question here. You said if it breaks midline, is that the middle of the entire ADR? Oh, good question. Let me go back to that. So that's a good question. So in the data, the midline, let me read the question in case you guys don't know. You said if it breaks the midline, is that the midline of the entire ADR, ODR sessions combined? All right. The midline, I'm referring to two different midlines. So there's the range contraction midline, which is the prior RDR session. So when you have this range contraction happening between RDR and ADR, then I draw this big box and I have a midline through it. Okay, so that's just a feature in TradingView that puts a midline through it. And as long as we stay above this midline, I tend to have a more bullish bias, right? So I've noticed this midline becomes important. So when we start, if we start trading, kind of coming down here below this midline, my bias is bearish. It doesn't mean I won't take a bearish signal from up here, but it means I feel a lot more comfortable about it when it's trading below this midline, right? So that's midline number one. Midline number two, which are the midlines that I tend to look at every day. It's the ODR midline and sometimes the ADR midline, depending on, kind of what's happening with price. And usually the ADR midline for, a target. But the ODR midline is the one that will change the data. So if we breach the ODR midline, so let's just come back here and look at this. All right, so this is the S&P 500. If we breach the ODR midline, let's just take a look. Yeah. All right, so we have upside. Let's take off contraction just for data purposes. So if we didn't have the contraction day, we're really looking at upside X plus. As soon as we breach that midline though, notice we completely go range expansion. So I just know that, once we breach this IDR high, we have the potential for a range expansion if we break the midline for sure. Okay. In trading, I'm not necessarily waiting for the midline to break, right? Like I could be looking right now for a range expansion. When we open, I might be looking for a range expansion because again, we're playing probabilities. And so the probability of this is possible, right? The upside X if we don't break this midline. And I get that. But if I'm entering a trade somewhere up here, right, then I still have room down to this midline to see what happens. So I'm not necessarily waiting for this to happen, but I know that once this happens, as soon as this breaks, we get a kind of a close below here, then we're definitely looking down here. Okay, really high probability that we're looking to go down here. So that's the midline that I'm looking for. Awesome, great question. All right, you guys have an awesome weekend. Have a great holiday. Have a great trading day. Later.